Today is Tuesday, August 12th, 2025, and it's 8:41 p.m. Well, 8:42 now, and it is the overnight market. But today I am up 1.58%, and my Roth IRA is up 3.44%. Mostly from AMD, of course. Anybody that has seen my previous videos will know that AMDL, the leveraged ETF on AMD, is my largest position in the Roth IRA. But this is on a day where the NASDAQ also had an amazing day, up 1.25%. And just to quickly update my transactions, there's nothing to update for you guys, but full transparency, I still show it. But there's actually a decent amount of stuff to touch on today. Lots of stocks making big moves, and there is one company in particular that just reported earnings, and conveniently, I wasn't planning this, but today was actually the first time I had ever been inside this particular business that we'll talk about. But to just quickly glance over my account, I think one of my Robinhood covered calls, so it's slightly red. It's just break even basically. But this one I am a little green on, so I am up over $50 on this Robinhood covered call. And I thought about closing this one out today, but then I thought, what's the likelihood of Robinhood hitting $135 by the end of this month? And even if it does, that is getting to excessive levels. Robinhood this year alone is already up. Let's just check. Robinhood this year alone is already up 200%. 200% in less than a year to date. So starting from January, this stock is up 200%. So if it hits 135, I'll roll it out, whatever. And if I roll it out to like 150 and it actually ends up hitting 150 again, and I end up having to roll it out even further, I guess that's a good problem to have, because the complete opposite could also be happening, and I wouldn't mind that. I would not mind it if Robinhood actually cratered to like $80 a share right now, even though it would kind of suck because my net worth would be down substantially. It is what it is. But speaking of Robinhood, it is up 0.82%. Nike is up over a percent. Palantir up 2.5%. Pepsi is up 1.3%. And just to show you guys my equity balances, it is now at 171, almost 172 for Robinhood. Nike is almost at 40K. Palantir also almost at 40K, but keep in mind, both of my covered calls, I believe, are now underwater. So I technically don't really own Palantir right now. And then Pepsi, of course, almost 20K. And one stock in particular that is rising the ranks very quickly is SoFi, and we'll get to that one in just a moment. And of course, if we take a look at my total returns, Robinhood is at 1,000%. And of course, we have today's standouts, just because I like making myself feel bad. We have Ethereum up 6% today, over 6%. And if we take a look at the price, it is over $4,500 right now. And why I don't own any Ethereum, I don't understand. Like, sometimes, it's good to have a very concentrated portfolio and to like focus in on a handful of stocks. But at the same time, you'll see like these no-brainer, well, not really no-brainer, but these other opportunities slip by. And I guess it kind of sucks, but I don't know. And of course, I think I said this in a previous video, but Solana almost at $200. Of course, I should have bought some more, but it is what it is. And of course, Lemonade just wants to keep going up at $55 per share right now. And unfortunately, I sold right after earnings on the earnings pump. And those 20 shares that I have are technically, quote unquote, free, even though it's not really free because I had to risk a little bit of my money to place the trade. And of course, I still have to pay taxes, but it is 20 shares of Lemonade that I have for free. Take a look at the percentages again. Solana almost at 10% today. SoFi over 6.6%. Lemonade 6.38%. Coles up again today, over 4.76%. And now we get to Cava. I think that's how you say it. But Cava, unfortunately, reported earnings today, and I think it was the guidance and the growth that disappointed the market. But the funny thing about Cava actually is I forgot this company was going to report earnings today, but I also, oddly enough, went to Cava for the first time ever in my life today. And my first impression of Cava was this place. I mean, you could tell it's bougie, and I don't know if it's because it was my first time there, or if it's actually like kind of confusing, but it was hard to tell what anything was because they didn't really have labels or anything. So it felt more like the type of place that regulars would have to go to. Like, obviously newbies like me, we don't really know what we're ordering yet. We have to like try everything. But it's one of those places that you have to like keep going to and learn all the stuff that they got going on. Or maybe I'm just dumb. Like that could also be a possibility. But the food was absolutely amazing. I ordered the lamb bowl, and I also had I think it's the blueberry soda at the fountain. I think it's blueberry, but wow, like clearly night and day better than Chipotle, of course. But it's also like double the price of Chipotle. And like, I didn't want to act all shocked at the register or whatever, but when I got to my total, I honestly couldn't believe it. It was $20 for a lamb salad bowl and my soda on the side. Just those two things. It was the bowl and the soda. It was $20. Now, I'll admit, I haven't looked into Cava deeply, but I've heard that their ingredients are much more premium and a lot healthier than Chipotle, and obviously better than fast food restaurants. And even the sodas are very unique. And like I said, I don't know the full ingredients list or whatnot, but it looks healthier. But yeah, like everything about it was good. The food was great. The drink was great. But the price, wow, this is an expensive restaurant. So I just thought it was kind of funny that earlier today, it was the first time I've ever been to a Cava. But then after the market closed, I see that Cava actually reports earnings and then their stock tanks. I just thought it was kind of funny. Maybe the stock tank because I went there. That could also be a possibility. Like if I had just sat at home, not went to Cava, maybe it'd be up 20% right now. Who knows? But I did go ahead and get a quick little earnings summary from Grok. Now, keep in mind, Grok is an AI. It's not completely accurate. And obviously, I'm not your financial advisor. Grok is not a financial advisor. But I just like to use Grok to give myself quick little summaries of what happened, because I can't always just sit through and read a whole like earnings transcript, Googling or reading a whole bunch of articles and whatnot. So I just found this to be much more convenient, getting a quick summary of an earnings event. But according to Grok, it looks like revenue was up 20% year over year, and earnings per share looks like it was about 16 cents. Same store sales growth 2.1%, and guest traffic was actually flat. Interesting. Restaurant opening, 16 net new restaurants, bringing a total to 398. It's about 16.7% increase year over year. Restaurant level profit margin is 26.3, slightly down from 26.5 last year. And it looks like net income was down from last year, and they also lowered their guidance. And of course, the stock dropped significantly after hours due to the revenue miss and the lowered same-store sales guidance. And then, of course, I asked Grok to give me some of the metrics that I like to pay attention to whenever I'm looking at a stock. And let's get right into it. So it looks like free cash flow per share is about 44 cents. No dividend, of course. 5-year revenue trend, about 24.3%. Tangible book value per share, a little over $6. Price to sales of 9. Return on capital is 3.34%. It looks like Grok is missing a little bit of information, but I think ChatGPT did give me a little bit more insight, and they have been consistently increasing their share count trend. And of course, short interest is about 12%. So with that being said, do I have any plans on buying Cava stock? So after my visit today, for the first time ever, and this earnings reaction, of course, the stock is down over 20% after hours and down 42% year to date. Do I have any intentions of buying it? I am interested in the company. I will say that. The food, I will have to look deeper into the company a little bit more, like kind of like their history, the actual food itself, and actually see if what everybody says about the company is true, which is like it's a lot more premium food, premium ingredients. So I will have to look into the company a little bit deeper, but I will say I am interested in Cava, the company. I think it fits very well into this whole Maha trend, this health trend that's been going on. I already own Honest, which is more of a clean skincare baby products. And of course, they used to roll out some cleaning supplies, and I think they will get back into that. And of course, all of the companies are announcing like cleaner ingredient, cleaner product, or better for you alternatives. So this whole trend is definitely going to help Cava. And I also like the fact that it's a premium brand and it's a premium company, because when it comes to like lower, like fast food chains, it's so competitive, right? If you sell cheap burgers, cheap tacos, obviously you can have success, but there's just so much competition. And in my opinion, it's just not as exciting. I think Cava potentially could be an exciting stock, and I am very interested in owning it because it kind of fits with me and what I look for in my portfolio. But at this time, I don't think I'm going to buy it. I'm going to wait and see how this reaction plays out, and I want to see how it holds up during the bear market that I think is coming, or the correction that I think is coming, 2026, 2027, somewhere around there. I do think we're going to have this like pullback in the market, bear market, or a correction, something, right? And a lot of these high flyer stocks like Palantir, Robinhood, and even Mag 7, like I think the S&P is so dependent on Mag 7 and passive investing. I just want to wait and see how it all shakes out. And of course, I want to see how a company like Cava holds up. And Cava, I believe they IPO'd at around $42 a share. They had a little pop, and then of course they dipped down into the 30s before having that massive run, of course, pushing $150 per share. And I don't know with Cava. I don't know if it's going to go back to all-time highs or potentially make new lows, right? Revisit the IPO price. And because I just don't know, I'm going to kind of wait it out. Cava is definitely on my watch list. I will definitely be keeping an eye on it. But I mean, you saw it. If the information that Grok provided is true, with the foot traffic being flat and same store growth only being 2%, with a company like this that's a lot more premium, of course, right, that could be a sign that the economy and the consumer is just pulling back a little bit. And me going there in person, I could definitely see people going, you know what, today I don't think I'm going to get that $20 bowl and drink, you know what I mean? Because a company like Cava, if they actually are healthier, right, that is worth paying extra for. That is worth paying a premium for. If it's a restaurant that actually sells healthy food, definitely that deserves a premium. But at the end of the day, when people are struggling, charging $20 for a bowl like that, it's really a luxury, even though it shouldn't be, because people's health is important. But that's just the world that we live in. Paying $20 for a lamb bowl and a drink, that really is a luxury. But yeah, I am going to keep it on my watch list. All right, and now we get to some of your guys' comments from previous videos. We have Clerk, I think that's how you say your name. He says, honestly, hope Hood goes bankrupt. Okay, well, clearly somebody missed out on the Hood train and they're a little bit salty about it. But honestly, Clerk, I don't know why you would say something like that, because even though I'm not a shareholder of Webull, I'm not out here saying I hope Webull goes to zero or SoFi goes to zero. I actually own both Robinhood and SoFi, and I think competition is a great thing because it keeps people on their toes. And I definitely have noticed Robinhood's push and aggressiveness to innovate really push SoFi as well, because right now they announced that they're gonna bring crypto back. And also, if anybody remembers, I believe the day that they announced the Robinhood Gold Card, 3% cash back, the same day or the same week, SoFi increased their credit card cash back from 2% to 2.2% for members. So, like I said, I think competition is a great thing, and I don't know why you would hope a company goes bankrupt, because that just means a lot of jobs are lost, and a great product like Robinhood is also going to be lost if it goes bankrupt or get bought out. So, I mean, I'm sorry that you missed the gravy train, but you can't let FOMO and basically regret because you missed out on a stock or whatever, or maybe you took a loss on it. You can't let that hold you back from constantly looking for new opportunities and keeping a clear mind. That is something that you're definitely going to have to do in the next bear market. And there will be a bear market. There's always going to be a bear market. There's always going to be a bull market. And you just got to keep a clear head so that when you're in that bear market or that bull market, you know exactly how to manage your risk. But we have Sack. I don't even know how to say your name. I'm just going to call you Sack. You said, saw this at 23. Only went all in at 74. You guys that bought under 30 can retire off these. You guys will be millionaires. Well, I appreciate that. And, I will be a millionaire someday, I hope. If I continue my year over year returns, that trajectory, definitely I will hit a million pretty soon. But I appreciate the kind words, Sack. And we have Gorbitron 3000. You say, thoughts on TSLL? I assume that is the leveraged Tesla ETF. I've been killing it since I jumped in during the massive dip in April, up over 40% the last 3 months. Also, any thoughts on XRP? So I have posted a video before saying that I got out of Tesla, and mostly it's just because I don't like dealing with the politics and all that BS. And also the numbers haven't really looked so hot in recent years. I have seen a lot of progress in Tesla personally, like just looking around in my own city. I've been seeing more superchargers. I've been seeing more Teslas on the road. And I think that EV credit coming to an end probably caused a little bit of FOMO there. But honestly, I'm probably not the best person to ask when it comes to Tesla. I just don't really care about the company as much anymore. I didn't lose any money on it. For some reason, AMD and Tesla have always just been good to me. I don't know what it is, but for some reason, they just don't really interest me. I mean, they're like the two homies that always took care of me, but I just kind of lost interest in them. Maybe I'm a fake friend, but oh well. We have Mr. Rayrod 1000 asking, can you show step-by-step instructional video on how to place a call or put on Robinhood? So I'm going to be honest with you, Mr. Rayrod. There's probably a million videos on YouTube on how to place a call or a put on Robinhood. And I'm not trying to be smart with you, but I think even the Robinhood YouTube channel has a playlist about options. But I will admit, I think I should do a little bit more of live trading. So like whenever I place those covered calls on Robinhood, Palantir, etc., I actually like show you guys like while I'm doing it. So, I will take that into consideration, Mr. Rayrod. And on the same video, we have Chicken Joe that says, you are the one that introduced long-term holding to me. I never realized that you can make so much money doing it. I'm up over 50% year to date because I stopped trying to be a swing trading guru. So congrats, Chicken Joe. And I'm happy to hear that you're doing very well year to date. But I'm gonna be honest with you. I don't really subscribe to like only one thing, if you haven't noticed already. I don't only do fundamental like boomer investing, Warren Buffett, whatever. I don't only pay attention to that, and I don't only pay attention to the technicals that a lot of traders like to pull up, and I don't only do long-term investing or swing trading or option trading, whatever. I just like to use common sense, basically. So I think you also had some more comments relating to covered calls, and that kind of ties into what I'm talking about, where I don't really subscribe, or like I don't strictly follow one strategy in every market. I like to basically feel out the market. If we're in a bear market, then yeah, that is a great time to set yourself up for some long-term holdings, like how I did with Robinhood. But if you haven't noticed, currently I'm rolling out a lot more covered calls on my account. Yeah, if we just take a look at my options, I mean, I have 1, 2, 3, 4, 5 covered calls and 1 cash secured put. So like, I don't only like to do one thing. I basically try to be as objective as possible, and just see where we are in the cycle. So during the bear market, yeah, I was setting myself up for a lot of long-term investments, no covered calls, nothing to cap my gains, just set myself up for long-term holdings. And right now, I think we're kind of getting into that hype stage where companies are IPOing, crypto is popping off. And it seems like there's a little bit more hype. And also with the Sam Benner cycles, if you guys didn't know, that also aligns with what I've been thinking. 2026, 2027, we'll kind of see a little bit of a correction. So that is why, well, that's one of the reasons why now I'm starting to roll into some covered calls, right? And it's not because I strictly follow covered calls and I tell myself I will make X amount of money from covered calls every single week. I don't really do that. I basically just let the market do its thing, and then I move with and around the market, if that makes any sense.